Let's get a check on where the major averages stand at this hour, pretty much at the highs of the day. The rally stretching a little bit. The Dow is the bigger winner among the major averages, up about 221 points right now. The S&P up about 0.5%. It's really those kind of trade war victims in terms of the Dow stocks like Caterpillar and Boeing that are leading the way. With us here at Post 9 to talk about the markets, UBS Director of Floor Operations, Art Cashin. Good morning, Art.
Good morning.
So have we kind of metabolize this trade war stuff for long enough that it can't necessarily pack the punch that it did before, or are we just in a lull?
Well, I think it's temporarily your friend. They haven't expanded it greatly. It's been kind of, I'll match you and you match me. So that has led the market to say, you know what, that could keep the Fed on hold. If we're uncertain about it, they're going to be uncertain about it. And so we can get great payroll numbers, we can get a variety of good things, and the Fed will watch them, but they won't be ready to rush in for fear of what's going on. Now you've got the president is going to NATO, and then he's going to stop by Britain after that. Now that became much more important now that we've had these resignations, and things will be interesting market-wise. What will that mean? What will it mean to the currencies, and where are we going from there? So it's all heating up, and central bankers will be talking all this week too, not just here, but all across the world.
Resignations, you talk about Foreign Secretary Boris Johnson in the UK, as well as the Brexit Secretary leaving over the past 24 hours. So what does that tell you, though, in terms of the implications for Brexit and meaning for the markets?
Well, I think that the concern was that the Prime Minister is going a little too soft on less exit in the Brexit, and the concern then became that they would still, if they wanted to leave the Union, it was because they felt the Union had too much control over them. And these resignations indicate that there is still fear that the EU will have control over aspects of the British economy. So we'll wait and see if the president can hold his tongue, but it presents an amazing opportunity for later in the week.
I mean, you mentioned the president's visit and how investors will be watching that. We're also watching how the president deals with Europe specifically on the auto tariffs, whether he decides to put in place those threatened tariffs on imported autos would hurt a Mercedes or a BMW, so many of them. What would the market do with that?
Well, I think if it went through, right now the market believes the opposite will happen. They think that the Europeans will accommodate to some degree, and that even if it's only to a slight degree, the president will step back and claim victory and say that will help. What's also interesting when you're talking about conferences is China is going to a conference in Europe, and they will be talking and negotiating with the union. So on the one hand, you've got these theoretical tariffs with us going against the autos and whatever, and you might hear a lot of little sidebars from the Chinese about, well, we can work things out with you guys. And there is more and more data coming in now suggesting that the Chinese trade imbalance is no longer as big as we once thought it was. So there's a lot of things playing here, and they are all tugging in a way that is holding back the Fed. And I think that's why you're seeing these rip-roaring markets coming together here. All is not safe with the world as of yet, but people believe, you know what, it might work out that way.
We should mention that the president did tweet not very long ago regarding North Korea, but tying China into it, saying China, on the other hand, may be exerting negative pressure on a deal with North Korea because of our posture on Chinese trade. There's the full text of the tweet. Hope not. So that's wrapping that into, yet again, into the overall discussion about trade between our two countries.
No, I'm sure he will build that in. I think to some degree he's right, but maybe for the wrong reason. I think that China is a little concerned about just how much North Korea gives in. If there was suddenly a breakout of prosperity in North Korea and it began to change the way it was governed and what was going, it would almost have the same negative effect for China as having South Korea on its border. So they're going to be wary. You've got both sides tugging either way here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.